is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely love being here with you. Hopefully you're off to a great start of your workday. It is wonderful Wednesday out there. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master, folks. Now, I am going to inspire you. I'm going to try to inspire you. In fact, you can call in here and you can inspire others as well. We had that happen yesterday during the Money Masters show when Bud Rolfs called into that. That was absolutely some inspiration out there, resiliency. We're going to talk a little bit about that because it's always important, folks, not to just inspire others, but really just simply to be able to lead an inspired life. That's really what it's all about. That's what you want to do for your children, your friends, your family, your coworkers, everybody, especially yourself, that are in your life, folks. So learn how to lead an inspired life. And let's go take a look at one of those building bricks to being able to lead an inspired life. And it was Bud Rolfs that inspired me to just simply talk about resiliency. That's one of our tools, folks. And you've got to be able to have, you've got to be resilient. You've got to have that in your tool bag. If you trade these markets, you absolutely, and you know what I'm talking about, you absolutely have to be resilient, don't you? But there's others all around us. If you just listen, there's always clues that are out there. There are people that are giving us that ability to simply be resilient. You know, Bud Rolfs, when he called in yesterday, he's on a new program out there. Sounds just great. He says he's feeling better than ever. So we plan on seeing him here 41 days, I think is what Tom said, on his 60-day program. But let's just talk about resiliency just for a moment, because we're going to talk certainly about the resiliency of the markets out here. But resilience, folks, is all about learning how to be able to withstand setbacks, isn't it? Really, if you think about it, and each of us have to do that, some on a daily basis, some periodically. But you've got to be able to deal with broken hearts, with broken dreams, with loss of health, loss of wealth, friendship, you name it. And it's all about being able to learn how to withstand those setbacks in life. And in order to be resilient, and you should write this down, I think, you need the following things. This is the formula. You need to be able to have self-discipline. What does that mean? That means when you're solving a problem, write things down, or if you're entering a trade, make sure you've got it down on a piece of paper first. You need to have self-discipline. You need to have self-reliance. You need to be able to rely upon yourself in order to be able to make decisions out there. What else you have to have? You have to have faith, folks. You've got to have faith in yourself and have self-appreciation. You should so much appreciate who you are. Everybody else that is in your life, folks, always have appreciation. Now remember, the more obstacles that you have to overcome, the more difficulties that you have to face in life, the more struggles that you've got, your ability to push through those things, folks, your ability to push through and conquer, that is how you become more resilient out there. So if the universe has thrown a lot of things at you, it just simply knows you can handle it, and it's just testing you, and all you've got to do is just step up to the plate, hit a base hit. You don't have to hit a home run. You don't have to hit a grand slammer. All you got to do is get on base. Just appreciate yourself, folks, and I'll leave you with this one last thought, because this is absolutely very helpful. Studies show that children are absolutely more resilient than adults. All you've got to do, folks, is go find your kid at heart. Go find your kid at heart, and you can be resilient. So now let's go take a look at the resiliency in these markets out here. You've got the Dow futures up about 120 points or so. The ES Mini trading out here at 1337. In fact, you can be watching us along on TigerTV. You can see the charts that I have on my screen. If you were watching us on TigerTV, you would see the ES Mini, the 30-minute chart. We're just simply taking a look at a shorter-term time frame to see what's going on in these markets. We're going to take a look at the A to B equals CD pattern that is setting up there. We're going to take a look at the retracement. We'll take a look at the candles, because those are leading indicators. In fact, if you were looking at this chart here, you'd see in the last 30 minutes as you came into the 9 o'clock session, you had a shooting star that was formed out there. So that's an indication. That's a possible reversal pattern. We won't know until we see how this next candle here plays out. You've got the NASDAQ futures certainly under pressure. We're going to see how when they open up, that's because of Apple disappointing on both earnings and on revenue. You could have expected the revenue number to have some difficulty, but on the earnings thing, those folks at Apple, in their accounting department, folks, they have been masters masters of disasters. That was up until yesterday, and really the last couple of quarters here, they have had misses. That is very unusual for a company like Apple. If we take a quick tour around the world, see what we have going on, you've got King Dollar pulling back 43 ticks. When I say around the world, that means we've got to look at the Queen. We're going to go take a look at the euro. That is trading up right now. Gold up $25, up 1 6/10%. Silver up 45 cents, up 1 7/10%. Light sweet crude only up 53 cents right now, not participating in the game out here. The DAX up 66 points. The FTSE up 21. The Nikkei was off 122 points. The Shanghai off 10. The Hang Seng off 25 points. So let's go start attacking these markets here. We'll take a look at some of the stocks that are popping and dropping in the pre-markets as well. So let's take a look at the ES Mini and see what it is that we have out here. So first, let's take a look at this candle right in about here. I just happened to be working out of the office yesterday, and it was probably at about, I don't know, right around 3 o'clock, 3:30 or so. 3:30, and it was at the time when I just happened to have CNBC on in the background. It's not that often. A lot of times I just have music on if I am actually working. And what was wild was, you had Maria Bartiromo. Is that how you Bartiromo? Whatever. You know who I'm talking about. MB, we'll just simply call her. And there was all of a sudden the rumor about the Fed and QE3 was about to begin, and you had the futures, sell, move up off of their losses out there, and of course that was up until the time when, in fact, it was before. It's just as soon as the market had closed, you saw the futures start to sell off again. This long red candle right here, right when Apple was releasing earnings, gave everything back, and so it was very interesting, very fun to actually just kind of watch the machine out there. But we're going to take a look at the machine here. This is the only machine that you have to pay attention to, and we'll take a look at the ABC pattern that is underway. Now, the A point is going to be the low right here on the ES Mini. Came in at 11:30 last night, down at the 13:21.25 level. That's going to be your A point. Your B point is going to be the shooting star that came in at midnight. Again, we're taking, well, it must not have been 11:30. We'll go back and take a look at that time frame so I can give it to you. But the B point on this is out at 13:28, coming in at midnight. The ES Mini pulls back, does a shallow retracement. When it does a shallow retracement, what's that telling you, folks? That's telling you you're going to do more than a 1-to-1 A to B equals CD. Now, you can see here, if you're watching on TigerTV, you can see the different levels that you are likely going, or that the market, when it does an A to B equals CD, is going to climb to. That first level, 1332. That was your 1-to-1. Your second level, 1333, then 1335, 1338. That's where we're trading at right now. We're at 1337.50. Now you've gotten a bullish a signal. We won't know until the market here, until this 30-minute session here ends. If you get a bearish engulfing candle, you'll have a confirmation there of that shooting star. Now, if we just simply take a look at retracement levels, let's take a look at the retracement level off the most recent swing point high. That's going to be that one that came in at 9:30 yesterday. The high out there, 1346.50. If you just simply go from that high down to the low, let's see when that low actually came in here. 21:30. That's 9:30. See, my math was off just a bit. So it was 9:30 in the morning that you saw, or 9:30 in the evening last night, where you saw the ES Mini trade down to 1321.25. That was our A point. What you see here right now is very close to that shooting star. 1341 was your 0.786 retracement. Actually got up to 1340. So the move here, it's possible it may be over. Just simply doing A to B equals CD out there. But inside the market here, what you have done is just simply a natural retracement off of that move down, and you have now completed an A to B equals CD. We'll see if you get a close here on the ES Mini on the 30-minute chart below 1337.25, and you're trading, or at 1337.25, you will have formed a bearish engulfing candle as well. Let's go take a look at what is going on in the currency marketplace, because that's really if we take a look at what's really going on in the market here, it's all about the correlation between King Dollar and the markets here, and King Dollar and the Queen. So when we take a look at the Queen, we're taking a look at the euro. One of the things that we pointed out yesterday on yesterday's show were the two butterflies that were out there. Feels like when you have butterflies in your stomach. Although on the charts here, we're taking a look at two long-term butterflies. We're taking a look at two 1.618 butterflies. Folks, that is where you have one heck of a big expansion. And when I talk about an expansion, if you just simply picture a rubber band and take a rubber band, wrap it all around your finger and as tight as you can, because when you do a 1.618, just when you've wrapped it around and you think it's pretty tight, a 1.618, folks, that's an expansion beyond where you think you've been able to do it. That's where you're really understanding potential, because you're going beyond what it is that you actually visualize out there. And so you would be wrapping it not just to the 1.27, but you would be wrapping it to the 1.618. Those are our two Fibonacci expansion numbers. Now, when you do a 1.618 expansion, folks, you should have liftoff. You should have energy. You should have a blast off. In fact, in this case here, that is a possibility inside the euro. But I pose this question to you. Would you change your dollars for euros right now? Probably not. We'll go back. When we come back, we'll take a look at the euro. We'll take a look at just simply a normal dead cat bounce out here, what it is that we can expect. And if it can't make that, folks, the euro wants lower prices. Why? Because you don't want to buy euros. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Futures, Dow futures up about 114, ES Mini up 7.5. And when we were going into break, we were taking a look at the euro, taking a look at the two butterfly patterns, so two 1.618 butterfly patterns that are on the screen here. So what you would at least expect, the minimum bounce that you would want to see here if this holds in the euro, would just simply take a look at the easy one. That would be the small butterfly, the one on the right-hand side. We're going to take a look at our Fibonacci retracement tool. So we're just simply going to go up from the high, that high being, looks like June 20th out at 1.27421. Maybe it was a little bit higher, just a couple sessions. 1.27462, either one. We're just simply going to go from that high down to the low that was put in yesterday inside the euro. That low made out there, and I suggest to you that that is just simply a short-term low. That low being 1.20411. The 0.382, folks, 1.23089. That would be a dead cat bounce. That's what it should do out here. What has it done so far? Well, what it's done so far, if we just simply take a look at the retracement, the last retracement off of the last move down, what we're talking about is a swing point from just a few trading sessions ago, July 19th. So we're taking a look at that new moon that came in, the high there, 1.23231, all the way down to yesterday's lows. And what you can see, what it has done so far already is a 0.382 retracement. That is what has stopped it in its tracks at this moment. That's at the 1.21488 level. You would expect the euro to actually pull back a little bit further from here, actually do a retracement, possibly go ahead and set up an A to B equals CD up. If we go take a look at what's going on with the king, because, you know, the king is a basket of currencies out there. And if we take a look at the king, you can see the king, so far, this is the weekly chart that we're taking a look at. The king really up over that red line. That red line is where I've got marked here, folks, for the triple top test. And you can see, and what I'm using that is I'm using the swing point from August 27, 2010. So 83.64. The king dollar trading at 83.74 out there right now. If you get a close above 83.64, and the U.S. dollar index has not done that on any weekly basis, not since August 27, 2010. You know what that sets up? That sets up being able to drift or move higher up into the 89 price point. Now, if you get a close above July 13th, that was 2 weeks ago. If you get a close of up 83.99 this week, that really would be your confirmation that the euro is going to go lower and king dollar is simply going to go higher out there. Let's go take a look while we have a couple minutes here before the bell opens. Let's go take a look and see how things are trading stock-wise individually. And if we start off, we'll start off with Apple. Apple closing out yesterday at $600.92, down 27 bucks or so, trading out at $572.10. That's a stock we're certainly going to be watching at the open. Take a look at the volume out there, see if that is going to trade lower. Netflix, having made a nice bounce, we're going to pay attention to Netflix and see what kind of volume coming out of Netflix. That closed at $80.39, folks. That is trading right now at 64 bucks. 63.91 was the last trade out there. So percentage-wise, that is a pretty big hit out there on Netflix. TripAdvisors, one of the IBD 50 stocks, TRIP, that is their ticker symbol. They closed at 43.47. They're trading now at 36.50. WellPoint, WLP, the ticker symbol. They closed at 61.42. They're trading out right now at 55 and a quarter. United Healthcare down as well. They closed at 54.90. They're trading down almost 8-9%, trading out at 51.79 right now. IGT, International Game Technology, out of Las Vegas. They closed at 14.69. They're getting a little haircut this morning, down, trading out at 12.95. Let's take a look at what we have on the upside here. You got Regeneron Pharmaceuticals. One of these days I'll get that name right. They closed at 121 last night. They are trading up at 135 right now. Riverbed Technologies, RVBD. They're trading out at 18.45. They're going to have a nice pop this morning. They closed at 14.55. Caterpillar moving the Dow for sure. They closed at 81 bucks and change, trading out at 85.19. We go take a look at Caterpillar here. Caterpillar is in a long-term bear market mode right now. We'll take a look at that. You've got ARM Holdings, ARMH. They closed at 22.34. They're trading at 24 bucks, having a little pop. You've got Symantec Corp, SYMC. They closed at 13 bucks and 18 cents. They're trading at 14.59 right now. BHP Billiton, to round things out, they closed at 62.52. They're trading right now at 63.77. 877-927-6648. We'll be right back, folks. Give us a call.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow up 90 points. S&P's up 3. Composite down 4. Small caps up 5. Microsoft up a nickel. Intel up 23 cents. Google up $3 and change. Cisco off 12 pennies. Apple, that's what we've got on my screen here. We've got the Apple chart trading down 22 bucks right now and change. That's leading dollar-wise on the way down. Right behind them, Netflix off 14 bucks. Buffalo Wild Wings down 7. Lorillard down 7 as well. WellPoint off 7. TripAdvisor's off about 7. C.H. Robinson Worldwide down 3. Everything else down about 3 on that side. On the upside, you got Panera Bread having a stellar day out there, up 8, almost 9%, up $12.69 right now. So let's go take a look at Apple, see what Apple is doing now. Apple had set up a Gartley sell pattern. That Gartley sell pattern here completing on July 10th out at the 620 level out there. And when we take a look at the normal retracement that you would expect on a Gartley would be to the 0.618 area. Just like when we were taking a look at the butterfly pattern there, you just simply would go from your low swing point, in this case here in Apple, you'd be looking at the May 18th area, the low there, 528.66, all the way up to the high that was put in at 619.87. 0.618 area would have brought you to 563 and change. You're trading at 579. Apple actually opened at 570. 4 and 46 cents. Let's go switch down here to, let's just say, the 2-minute chart here. We'll put this on a 2-minute, see what volume is doing here. So you can see Apple gapping down with volume, doing that with 2.1 million shares. The value investors are out there snapping it up right now. This is going to be an important stock chart for us to pay attention to and to watch, because that'll give you some type of indication with regard to the bounce that we are seeing here this morning and a strength behind that. That's going on in Apple. Let's go take a look at Netflix, see what's happening with Netflix out there. NFLX is the ticker symbol, gapping down this morning. They're trading out at 65.51. So Netflix coming all the way back to the area where it broke out. Let's just go ahead and get rid of the lines here on the charts that we've got. And we're going to go take a look and see first where Netflix is trading back into. Now, when you take a look at Netflix, Netflix gapped up, broke out, and it really did that beginning July 2nd. July 2nd, it had 1.8 million shares. The following session, 3.6 million shares on July 3rd. We came back from the July 4th holiday. This thing had some fuel under it, 15 million shares. That's what it gapped up with. So far this morning, and you've only been trading here for 7 minutes. In the first 7 minutes of trading, down with 2.3 million shares. So that 2.3 going against the breakout area that had 1.8 million shares. What that says is that Netflix wants to trade down into the swing point. Now, June 1st is the swing point that we would be, you'd be looking at June 1st, or I suppose you could also go take a look at June 14th. June 14th, 3.7 million shares. June 1st, 5 million shares. That area has not yet been hit. The high of June 1st is 63.73. It traded down to as low as $64, round number even. Maybe Baz will have something to say on that. And today is a full lineup here at TFNN. We go to, after this show, the Money Masters show. Then we go to Basil Chapman up to Newton, Mass. Larry Pesavento out in Tucson. Daryl Martin for the Diagnostic Trading Hour in Dallas. David White back here from 2 to 3. And then Ken Shreve 3 to 4 at the Tom O'Brien show 4 to 6 p.m. today. So that is on Netflix. Let's go see what's going on with Lorillard. LO is the ticker symbol out there. They are trading down 6% this morning. LO, the ticker symbol. That is gapping down this morning here. Let's go see what Lorillard is moving into. It had a sell-off here. The last two sell-offs that it had were back in May 25th and May 29th out there. It is back into those areas. That's where you last had any type of high volume, with the exception of the area here where you had very narrow price spread on June 22nd. What I mean by that is you had a low of 128.21 and a high of 129.20, 129.54, and it did that with 3.2 million shares. Now this morning here you've gapped down right into that area, actually just trading a little bit below there. So you've gapped into that area. You've done it with 252,000 shares in the first 9 minutes of trading out here. Looks like what this wants to do is come back all the way to the swing point area, because, well, the first area that it's going to find some support is going to be here in a little while today. Is going to be down at the 124.77 or 126.69. That is on Lorillard. Let's go take a look at Panera Bread, see what she is doing to the upside. PNRA is the ticker symbol there. PNRA. So we take a look at Panera Bread. Panera Bread gapping up this morning and doing it with some volume here. Again, the first 10 minutes of trading, 450 million shares on the way up. And the stock chart here looking pretty darn good. It did have some institutional selling, and that first sign of institutional selling took place on February 8th when you had 3.4 million shares to the downside. Now you got back up on lighter volume. When I say lighter volume, we're talking about volume of 420 million shares on March 27th, 316,000 shares on March 15th. It did complete an A to B equals CD down off of the high that was put in on March 27th. That high was 165.99. Your B point was April 23rd when it got down to 147.20. Retraces back up to a high on May 2nd when it gets up to the 161.50 area. You see Panera here doing a 1 to 1.272, A to B equals CD down. No real bullish sign that I see here candle-wise as it moved back up. And what you've got right now is it's been really in this little sideways trading range here ever since really the first sign of institutional selling. Really since the first sign of institutional selling. What you could do is just simply draw a line here, a horizontal line, which will do from the February 8th high. Again, that price is 158.47, and in your consolidation range, really at the bottoms here, at the lows of June 28th. But what Panera Bread is trying to do, it's into a supply line. It's into that first supply line going back to February 8th. 2012. Let's go to Lou in Nashua. Lou listening to us on 1590 WSMN. Lou, thanks for calling. Thanks for holding.
Good morning, Steve.
How are you today?
Okay, how are you today?
I'm doing great, thank you. What did you want to look at?
Here's what I did. I took my profits on IWM.
Okay.
At 3:30, and I bought calls for SPY.
Okay.
And I'm looking to reshort SWM at some point, but I need your guidance.
You want to go short the IWM again?
Right, at some point.
Yeah. So, let's go take a look at the IWM. Let's go see what she is doing here this morning. The IWM right now, the small caps trading out 77.30. The IWM being the weak link out here in the indices in the markets. The first place that you're going to probably take a look at shorting the IWM is right up here at the gap. So you'd be looking at the highs of July 23rd at 78.03. The high of July 24, 77.98. That would be your first range to really take a look at jumping back in on a short position out there. What you'll also really run into, and what you can use as your benchmark, goes all the way back to April 10th. That was a large downdraft in the IWM. The low there is 78.14. That had 101 million shares. So I would use that as your benchmark there if the IWM is able to bounce up into that area. And with regard to the SPYs, if you take a look at what's going on inside the ES Mini, just simply on the 30-minute chart, you've got the ES Mini. If it breaks above the 1340 area, and the reason why I say 1340, as we were coming on at 9 o'clock, you had a shooting star candle out there. You did have follow through with a bearish engulfing on that next candle. You've got the ES Mini trying to get up into that area. Shooting stars, just like hammers, are oftentimes tested. So what you want to see for your calls is you want to see the ES Mini get up above 1340. Gets up above 1340, then what it should do is should run up to the 1346 area, where it'll make a 100% move of a move. Expect to put on your fasten seatbelt sign if the ES Mini gets up to that 1347 area. Okay?
Great.
You bet. Thanks for calling, Lou, and have a great day.
Okay. Thank you, Steve.
You bet. Let's go to Kevin in Sterling, Massachusetts. Kevin, thanks for calling. Thanks for holding. How are you today?
Good. How about yourself?
I'm doing great.
That's good. Hey, I was listening to Tom just briefly last night. He said something about the DAX going to check to his June 4th lows. I'm looking to get into the EWG, which is the iShare of the
iShare Germany Index fund out here. So let's go take a look at the DAX for our man Kevin, see what the DAX is doing over in Germany right now. You've got the DAX trading up 62 points, trading out at 64.52. So let's pull that chart up here as soon as I can find it. I'm sure it's right in front of my eyes. There we go. So now we're up and we've got the DAX. And so tell me what you said Tom was mentioning what to you or on the show?
Oh, he just mentioned briefly that the DAX was going to go to that June the 4th low.
June 4th.
That again?
Got it. Okay.
And I was just wondering if you sort of concur with that.
I do. What you had with the DAX here, the DAX is in an A to B equals CD down pattern. And what's really critical when you're making ABC patterns is really mastering that C to D leg, taking a look at especially the first move or really any move during that C to D leg. And whenever you have gaps, gaps should be respected. Visually it's like a wide-ranging bar, and you want to be paying attention to wide-ranging bars and gaps. They're telling you, important information. In the case of the DAX had gotten back inside its uptrend channel. That uptrend channel starting all the way back at the lows in September of 2011. It had broke outside of that channel. The first time that it really broke out of there was in the May time frame, and the question was that a false breakout? The DAX getting back in there in the early part of July, then getting back in with a little bit of conviction July 18th. But what the DAX did was what that really did is if we go take a look at retracements, Kevin, if we go from the high on March 16th down to the low, what you'll see is that was a 0.618 retracement, a normal move out there. And so as the DAX came off of that C point, came outside, gap back down out of the channel, did it with conviction, and that really sets up, and Tom says wants to go to the June 4th area. That's because that's where your next swing point is, so that's naturally where it would go to. What the DAX actually wants to do is get down to 54.95. That's where it really wants to head back to. That would be the November 25th area, inside the DAX. So if you're not inside the trade, now the question becomes, okay, where do you get in? Mm-hmm. And so if you're taking a look at, and the thing is, you have to really play that ETF off of the DAX. And that one's a little bit more difficult to figure out where the DAX could, like a dead cat bounce, Kevin, is 65.25. It's at 64.36. So that would be a real healthy bounce from here. I don't know if it's going to have the energy to actually do that. Yeah. That's the thing. So what I would do is if that's what it is that you want to play, what I would do is give me a second here to pull up the calculator. If you take a look at the position size, calculator, and I'm going to put that on the screen here for you. We're going to take a look at the EWG just simply to see what the average true range is on this. So the EWG is about a 40-cent average daily true range there. So you're going to want to make sure that you have a stop somewhere wherever you enter it. Make sure that it's 40 cents times $1 times 1.618 and a stop above wherever it is that you enter.
Okay.
You know, and what I would do is, because this could be something that you would want to scale into, you know, what you might want to do is determine whatever position size it is you want and take a third or a half. And if it moves in your direction, go ahead and add to it. If it's moving against you, just sit tight.
Okay.
Okay, add to the winning position, all right?
Can I ask you one quick question?
You can ask me 2 quick questions.
Okay, just in terms of volume on these things, I know they follow they're supposed to follow the index. But if you look at the EWG, J, which is Japan.
Yeah.
I mean, yesterday there was huge volume, on this chart. But
right.
Does that mean anything?
You know, I wish I could answer that question for you. Because I don't have the volumes. I don't get the. Well, let me go check. Let me just check and see if I get the volumes on the Nikkei. I don't think that I do get the volume, but we're going to just check that out for you.
But on the what do you call it, the iShares?
Yep.
It was like substantially quite a bit.
Right. You know, if we just take a look at this, so let me try to see if I do get volume, and I do not get volume on that. But you do want to go ahead and trade that ETF certainly off of off of the Nikkei. Now, what the Nikkei did last night, if we take a look at the ABC pattern on this, Kevin, if you want to stay through the break, we can finish this up for you.
Okay.
All right. 877-927-6648. Dow up 64 points. S&P's up 1. Composite down 1. We take a look at Apple here real quickly. Apple trading down $24 and change. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. We're on the line with Kevin in Sterling, Massachusetts, and Kevin wanting to take a look at playing some of the world markets. So we're talking about the Nikkei, and the ETF for that, the iShares ETF that you can play on that, is the EWJ. So when you take a look at the Nikkei, what I like about the Nikkei setup, and again, I don't have volume here, but if you take a look at the Nikkei setup, what it has done is very close to completing the 1 to 1.272 A to B equals CD down. I expect that the Nikkei will go ahead and do that this evening, and it will go ahead and test the June 4th swing point out there. It got close to it last night, but no cigar. The high is 8,303 and 35 cents. It actually got down to a low of 83.2802. So I would say it's either today or tomorrow would be, your back is up against the wall here. This is an easier trade to enter as opposed to the DAX trade, because you're up against a swing point. And so you're going to know whether you're going to have a failure pretty quick. And the failure is going to be taking out the low of June 4th, which would be at the 82.38 level. So how does that translate into possibly taking a look at the EWJ? Well, if we go take a look at the EWJ out here, that is trading right now at 875. And so, you could take a look at getting into that. If you were going to take a look at that trade, Kevin, what it would look like is something like this, at least as far as what I would suggest you're looking at. And I'm just simply using the position size calculator because that is the most important aspect about your trading, is making sure that you have done all your homework ahead of time, because what you've got, that's when you're most objective. And also you want to make sure that you have the proper position size. So in the case here, I talk about folks being able to risk 1% or less here. Well, on the EWJ, you want to always make sure your stops are outside of the average true range. On the EWJ, that happens to be 11 cents. So if we just simply use an expansion of 1.618, that says your stop should be 18 cents on this, okay?
Okay, yeah.
And but if you risked 1% of your trading capital using a stop, so let's say you entered it today, right now, you'd be buying it at 875, your stop would be 857, an 18-cent stop. If you just risk 1%, that would say you'd have to risk, now you wouldn't be risking, but you would be allocating 50% of your capital. I don't recommend that you do that for anything. On an index ETF, I suggest 40% would be the max out here. So
okay.
even a 0.5% risk is allocating 25% of your freed free working capital. So,
Okay.
And the number of shares you'd be looking at is about 300 shares. 281 is the number, but I'd round up or down.
Okay, well, I appreciate your insight. Thank you very much for taking my call.
My pleasure. You have a great day.
Okay, you too.
Okay, so let's go back over to Apple, see what Apple's doing. Apple down $25 and change right now. So after that first sell-off, she's coming back into that area. You can expect Apple to get down and test the 570.51. Of course, that is the 2-minute chart. Let's put it on something a little bit more realistic than 2 minutes. Let's go take a look at the 5-minute chart out there so you can see how Apple's trading inside that area, and expect that to be the next spot for you to identify where Apple's going to go to. 570.51. That's on the 5-minute chart. Again, if we take a look at the daily chart out here, what you can expect. And in the case of Apple here, you do have Apple now making another A to B equals CD, and certainly taking out that B point with volume. Now, it's a small ABC, ABC nonetheless. So let's take a look at the ABC on that. That's going to be your high on July 10th out there. That's at 619.87, your B point. July 12th, your C point is July 19th. The 1 to 1.618, that's what Apple has done this morning. That price, $570.27. What did Apple trade down to? $570.51. Thanks for being here, folks. Stay tuned for the Money Masters show. If not, I'll see you tomorrow morning, 9 o'clock. Bye-bye now.